We're live, Mohsin. You're talking to the world.
Allahu Akbar. Assalamu alaikum, everyone. Hope everyone's well. Hope you've prayed Maghrib or are just about to. I think Ibrahim, you might be diving off to pray Maghrib shortly, right? So why don't you go and do that, and I'll pray Maghrib in a few minutes, inshallah. So yeah, Jazakallah khair for joining us. We're really looking forward to the first of three Halal Invest Fests, as we've labeled it, and it's going to be about everything halal investing, and that's exactly why you've tuned in. So today we want to be focusing on the stock market, because the stock market is something that we get a lot of questions about. We also do talk a lot about it, but there's no harm whatsoever in covering lots of interesting ground. So we'll be talking about things like, what is a stock? What are the benefits of a stock? What are the downsides of a stock? How much of your portfolio should be in stocks? And then we want to be talking about our own experiences, things that we've experienced in the stock market and how you guys might be able to, learn from those experiences as well. We'll also be talking about where you can actually invest as well, because it's not exactly clear all the time. So if you're just starting out and you're seeing lots of different websites like Wahid, like AJ Bell, like Hargreaves Lansdown, and you don't know your SIPs from your ISAs and you don't know your ISAs from your LISAs, then you've come to the right place, because we'll be talking about all these kinds of things as well. And not just, the other big thing with all of this is Sharia compliance issues too. And we'll be talking about that as well. And the backdrop to all of this, by the way, is that we are launching an upgrade to our course that we've got for halal investing. And we did this course last year, actually. And alhamdulillah, it's done really well. Lots of people have really benefited from it. But what we decided to do in readiness for 2021 was basically to update the whole thing. And that is what that's what we're launching. And inshallah, it's going to be really beneficial. So I'm going to kick off now and just talk in really basic terms about, what actually is a stock, because everyone talks about the stock market. You've probably had stock market tips from your friend or from your uncle or whoever it might be, and you're never really quite sure what to believe. You might think that the stock market is for city slickers or for Wall Street brokers and not for you. But I can tell you that it is for you, as long as you know what you're doing. So in a nutshell, a stock, or sometimes referred to as a share, and by the way, if you've ever been confused about the difference between a stock and a share, then don't be confused. They're exactly the same thing. And I remember spending, months thinking, what is the difference between a stock and a share? And I can't really ask anybody this because it's a bit basic, but I'm telling you, there's no difference. So a share or a stock is basically your slice of the pie, and the pie is the company that you've invested in. So let's take a big example. So here in the UK, we have, for example, BT, British Telecommunications. They're a massive telecoms provider here in the UK, and they're a publicly listed FTSE 100 company. And me and you, we can go on to any broker and we can buy a slice of that massive pie, which is BT. And all we have to pay is the share price, which the big pie is divided up into lots and lots of tiny little shares. And at the moment, BT shares are, I think, around the £2 mark. I may be wrong on that, but it's something in the single figures anyway. And you can go on and you can say, look, here's my £1,000 or my £5,000, and I want to buy as many slices of the pie as my money will get me. And then you own that slice of the pie, and that is yours forever. Nobody can take that away from you unless you sell it. And you are entitled to receive dividends, as the company does well. And you're also entitled to sell those shares if the price of those shares increases. So I'm going to hand back over to Ibrahim to add to anything that I've said and also to carry on. And I'm going to duck out and pray Maghrib.
Look at that, mashallah, Mohsin, mashallah. Look at this. Guys, we didn't actually think this through properly before we arranged for the 6 p.m. start, so apologies for this. But we've mindfully carried on because we've taken advantage of the COVID separation of locations between me and Mohsin. And Mohsin's up in Bolton, so his Maghrib has come in about 4 minutes after mine. So I've done my Maghrib and have joined him now. So I'll carry on. Actually, a really interesting story about BT stocks, very random story, is my mother-in-law got some BT stocks when BT first listed on the stock exchange about 20 years ago. And since then, it hasn't done very well. And she exited a few years ago with the 3,000 that she put in. So after 20 years, she's basically got back, no profits. And since then, I then went ahead and put her money into a whole bunch of different AIM index stocks. And we'll talk about this later as well, by the way. If this sounds like gobbledygook to you, we'll explain this later. And now she accepts me as an Islamic finance guru because I've made her 100% profit on her investment. And she was very suspicious of me, and rightly so, when I first got married to her daughter. But ever since I've proved my credentials on the AIM index, she's seen the light, and she thinks that I really am an Islamic finance guru. So there we are. In terms of what is a stock, and Mohsin has very helpfully outlined the key tenets of a stock. But really high level, when you think about why do you actually care about investing in the stock market and in stocks and shares, and why is this such a big part of any person's investing portfolio? The key reason is because the stock market gives you exposure to the entire economy. Because what is a stock? A stock is a share in a company, and a company is doing business, and that's the way it makes money. So if that company does well in that particular industry, in that particular sector, and you hold stocks in that company, then you do well. And so when you are investing in a variety of different stocks across a range of different industry classes, perhaps across a range of jurisdictions, what you're actually doing is you have exposure to the wider economy. And that's fascinating, because it means that you're investing in an asset class that is intrinsically, like in of itself, the nature of stocks is that if you invest in lots of different stocks, you're going to have a diversified portfolio. It's not like property. So if you invest in one property and then you invest in another property, the risk profile of both properties is, broadly speaking, fairly similar. Whereas if you're investing in two different stocks, their correlation with each other is not very much. If the one particular industry is hit, the other one isn't necessarily hit. So this is one of the key, I guess, benefits of the stock market. And I guess the other the big thing to mention here is that yes, it's true that stocks and shares are a great addition to anyone's portfolio pretty much. There are some downsides as well to the stock market, and a key one I guess that I can think of is that the stock market is consisting of only public companies. So these are companies that have grown fairly large, and they have sufficient size to actually be able to afford to be put onto the stock exchange. And that means that you aren't necessarily investing in the smaller companies, and they have their own risk profiles, of course, but that's often where a lot of the growth happens as well. So that needs to be contrasted as well between what you're getting yourself into, and you need to understand the kind of downsides to the stock market as well. And I guess the other big downside is it really strongly correlates overall with the wider economy. So in times of good, the stock market is rising, and in times of trouble, you typically see the stock market falling. And we'll probably see the stock market leveling out and start falling at some point because of COVID as well. But over to you, Mohsin. Any other downsides of stock that you can think of?
I guess the thing with stocks is that how everyone talks about property, right? And you talked about property just a second ago, and people love property because they're like, it's bricks and mortar, and you can't go wrong with bricks and mortar. And for the same reason, people love gold, because it's something you can touch and feel it. And I think for that reason, a lot of people feel uncomfortable with shares because what are shares? Shares are a bit like money. They're a piece of paper ultimately that they have the worth that society tells you, and in a given moment, if there is a bad news story or like something really bad happens, those shares can just become worthless. So a good example of that would be, you remember Carillion, the big contracting company, who went bust not too long ago, probably a few years ago, and they were a massive company, but several things kind of happened, and they just went bust. And it can happen to the biggest companies. We've seen companies like Debenhams really struggle in recent years, and that's just the nature of business in many ways. But if you're left holding the shares of these companies, that's obviously not good, because if those shares become worthless, then that's your investment down to zero.
Agreed. Jazakallah khair for that, Mohsin. And the other thing to think about with stocks, and this is very much just talking about introduction principles, theoretical stuff that you kind of need to be aware of when you're getting into the stock market, is how much of your portfolio the stocks should consist of. And I think this is like how long is a piece of string? It is something that's very subjective to each individual, and the kind of things that you look at to determine that are things like the risk profile, what you're actually investing for, which is a really crucial thing that you need to answer, because for every person it's different. And also how old you are, whether or not you're saving for your house, what kind of risk appetite you have. All of these things form an important part of the decision on whether or not you should, what percentage of your portfolio should be stocks. But high level, having said all of that, we like to always try and pin some colors to the mast so that you actually have something to kind of roughly go on. I would normally say that if you are early on in your career or early on in your investing journey, you can tend towards more equity. And be a bit more aggressive on the equity side of things as well, because within stocks and shares, they come within lots of different flavors as well. And you can have very passive tracker type funds, or you can have some quite aggressive strategies as well. And we'll talk about that in our experiences very shortly. But then you've got, as you get older and older, you typically want to reduce the equity side of things down and down and down until you get to a point where you're mainly holding cash. And this is in particular with your pension pot. And the reason is because, when you're nearing the age of 60, 65, and you're going to take your pension out, at that point, you don't want to be 90% equity and then COVID happens, and then suddenly all hell breaks loose and your pension is kind of gone up in smoke, right? So you don't want to risk that. And as you get closer and closer to your pension, you want to move your equity into more and more liquid capital as you can. And actually, really interestingly, Wahid Invest have launched a product on this, and I will talk about this later, that helps you do that. And I think that's great. And so we'll discuss that in a while. But then, in terms of everyone else, you're broadly speaking, I think, looking at something like, if you're aiming for somewhere between 70 to 30% as a rough range in terms of equity exposure, then I think that could be quite interesting. But again, to reiterate, this is something that requires a bit of thinking and bespoking to your particular needs. And we actually, we talk about this in our course as well, which we'll talk about later on, but also in the various different articles that we've written as well. But Mohsin, this is the one that we've all been waiting for. Mohsin looks like he's a very, simple, in Urdu they say Sida Sada individual, very straightforward Gujarati living in Bolton. But actually, what you see is hiding a very, very, cavalier interior. And in his youth, Mohsin was an aggressive trader in the AIM index and in penny stocks, and many a fortune was won and lost during his time on the stock index, on the AIM index. And in fact, I think markets used to get very bullish whenever you started buying in the stock market. So, but I'll let you explain your story. Like, how did you get, this is, and guys, by the way, the reason why we're talking about our personal experience is because it quite nicely matches up to various different, life points that you'll go through as well. So Mohsin, talk to us about your, your relationship with the stock market and how that's evolved over time.
Yeah, it's been an interesting one. I mean, I think the thing about the stock market, I mean, just to give you like my story, and as Ibrahim said, like we want to give you our story because I don't think we've kind of told that very often, actually, personal stories. So my story is that I can't remember when it would have been, but I kind of got interested in the stock market, and like many people, I didn't have a clue. I remember the feeling I had about the stock market was that there's a particular formula that you have to crack, and as long as you know what that formula is, then you make money. That was very, very wrong, and I kind of discovered that. I actually remember having a conversation with you, Ibrahim. I don't know even if you remember this, but I was like, "Yeah, who do I know that would like be able to crack this formula?" And Ibrahim, for those of you who don't know, studied politics, philosophy, and economics at Oxford. The economics bit being the key bit in my head. So I was like, what is all this stock market palaver? And Ibrahim was telling me about all these different indicators that you get and this, that, and the other. And I was like, okay, it sounds interesting. I bought a few books. And then after a while, I was kind of like, okay, now I just need to dive in. And it was a really, really, really interesting learning curve. And the approach I took to it, and by the way, I think this is when I was pretty young. The approach I took to it was that any money that I lose is, I'm going to call it tuition money. I'm not going to worry too much about losing, and I'm only going to put money in the stock market that I can afford to lose. And yeah, if I lose it, then that's tuition fees. And I basically, I'm not sure exactly how, but I started becoming really interested in smaller companies. The ones which, as Ibrahim mentioned, they are often listed not on the FTSE 100, which is probably the index that you've heard of, but another index called the AIM index. And it stands for Alternative Investment Market, I believe. And here you will find a range of companies, often very, very junior ones, some with a valuation of as little as, I don't know, 5-10 million even. You will also find some really, really big companies on there. Like I think Boohoo maybe was on there until perhaps very recently. And there are some big companies on the AIM index. So it's not just small companies that are on there. But the reason small companies were interesting to me and are interesting to me is that like anything big has to start off necessarily as something small. And if you can catch it when it's small and you can carry on with it towards its journey as it becomes big, then you'll be in for a very, very big win. And I remember being really inspired by a book called The Zulu Principle. And the Zulu Principle is written by one of the best small cap fund managers at the time. It was Jim Slater. And what Jim Slater said is that he came up with either he came up with it or he came across it, this notion of the Zulu Principle. And the Zulu Principle is that if you spend, I'm going to paraphrase this, it's not exactly right, but if you spend like 10 minutes Googling about the Zulu tribes, you'll probably know more than about 99% of people about Zulu tribes. If you go down the library and spend an hour reading a book, then you're even within that 1% of people, you're probably better than most, and so on and so forth. And if you go out to the Zulu tribes and live with them, then you're in that kind of probably top 0.0001% of people. And what this is really driving at is that when it comes to small companies, they're not very well known. So the more time you kind of spend learning about them, learning about just like macroeconomic factors and then zoning in, you will be able to get an edge that actually people in the market don't have. And the reason for that, you might be questioning that and saying, oh, that's impossible. Like, why would some huge funds out there not know about these small companies? And the truth often is that they might well know about them or they might not, but frankly, they can't invest in them because they're too small. And that sounds really weird from mine and your perspective, sat in our living rooms on a dark Tuesday evening. But there is a problem where institutions, they have to have like a certain minimum ticket size, and they can't invest in these small companies. So that just really got me interested, and I started thinking, well, if that's the case, then maybe I should find some of these small companies. And it was a really, really interesting journey from there. we spent between us probably a good few years just dabbling in these small companies. Made a lot of money, lost a lot of money, and it was just a lot of great fun. And then life got in the way. We got married and started buying houses and having children and that kind of thing, which meant that we needed that kind of liquid capital to be able to do those things. But as time goes on, inshallah, and as we start building up that capital again, I very much look forward to annoying you, Ibrahim, with lots of research notes.
Definitely. And Mohsin, you put a very genteel veneer over what you did, but I can tell you, ladies and gentlemen, that I was telling Mohsin about stock investing for about 2 years, I think, before Mohsin finally like clocked, and then he clocked independently, and he was like preaching to me as if like this is something that he discovered, and then and then I was kind of telling him, I'd done a lot more reading, but at that point, so I was telling him that look, it's all about value investing. Look for the fundamental, like growth in the business, and the long term, and all this sort of thing. And Mohsin was like, no, forget that. I'm going onto the lsc.co.uk, which is a forum. And I'm following these kind of jokers who are trying to. Well, he didn't know they were jokers at the time, and they're kind of saying, "Oh yeah, buy this particular stock; it's fantastic." and then Mohsin would pile in, and things wouldn't go necessarily that well. But over time, we learned quite quickly. And actually, funnily enough, Mohsin, I mean, I told the story about my mother-in-law, how I got her to swear by my talents. Mohsin did the same thing with his father-in-law. And he took, I think, like 3-4 grand of his father-in-law's, like
2.9K, yeah.
Like he had like some kind of a car accident or something, bichara, who and he got some payout. And Mohsin put the entire amount into these like 4 like quite high growth stocks, and it's now worth something like 12K or something. 14K. Oh my god.
Yeah. In the end, I took. I think it was. I cashed out when it was like 12 or 13, and then I went pretty safe and I invested in Microsoft, which did quite well actually.
Fantastic. Yeah. So, and we've actually not done like, we actually get quite, I feel like, damn, I should have listened to myself in all this advice that I've been given, because, we've been helping, your father-in-law out or my mother-in-law out. But in that same period, we've been up to something different. And look, this is the bit where I kind of talk about, our evolution. So this was early stage, right? When we were young, we didn't have a family necessarily, and we had a little bit of money, and we were thinking, look, 2K, if we lose it, is not really going to make a difference, because the next big thing we want to get to is something like 20K, 40K, 50K as a deposit for a house. And that's like 2K is like neither here nor there. So we might as well go quite aggressive to try and double or treble that, and like actually make a material difference. But over time, as we matured, I worked in the city, and alhamdulillah, you had a decent salary in the city, and I sadly don't anymore because I've left. But the journey of saving up for a deposit is a fairly long and harrowing one, and you don't want to necessarily risk that deposit in something that's high risk. And so at that point, you want to put something, you want to put your money into something that's fairly low risk, safe, and quite easy to access. And for me, that looked like Wahid Invest. And guys, anything that we mentioned, by the way, the link is below. And if you can also go directly, but we then don't get any kind of click payment. So if you do want to support us, then do use the link below. And Wahid Invest was great. I just used ultra conservative portfolio, which for someone who's very aggressive about 2 years ago was remarkable. But that's what I used, and I parked it in there for about 9 months to a year, and then I exited that, and you can get your money out fairly quickly from these places. And I just held it in cash, because for that 3 to 6 month period up to the actual completion of the house purchase, I just didn't want my money in anything. And I'm very happy to hold in cash for like 3 to 6 months, because the cash is the safest way to hold things, and it's worth it when you're about to put down a deposit and you can't really afford to lose it at that point. So that's kind of the kind of, as you grow up, you go for things like Wahid, and my pension, by the way, that I have with my former law firms is with HSBC's Amana Fund, which is the main fund that most pension providers offer. So that's kind of the more conservative, or like as you grow up, that's kind of how you shift. But now, once we have our deposit and once we have our houses, we're now ready to go and get stock, investing again. And I've actually recently got a payout from my from a startup investment that I made, and I got a tax rebate of about 2,500 from that. So I'm actually, I know I'm raring to go. My wife sold some gold because it was up, so I've got about 3 grand, and I'm looking pretty dangerous, I think.
That's interesting. My wife was also thinking about selling gold.
Is she? Well,
Yeah.
I think you should do it. I think you should do it. Apparently, there was a peak about a few weeks ago, and it's been a bit downhill since, but it's still pretty good. So, guys, that was the second section, which is our experiences. Mohsin, anything to add at this point?
No, other than just to reiterate the point that, all of this stuff is, I guess it just goes down to that question of risk. Like, as Ibrahim said, we did all this stuff because we could, and we were young, and we had the ability to do that. But we could sit here and talk about risk for a long, long time. But we cover that in much more detail in the course.
Okay, so now the one that I don't know if you've been waiting for it on the edge of your seats, but you perhaps have. Where can you actually invest? So, where can you actually invest? Mohsin, do you wanna lead off on this?
Yeah, so why don't I talk about the stuff I was talking about earlier, which is basically like if you're going to take that route of just what I like to call DIY investing, which is I'm going to choose what companies I invest in, and nobody's going to stop me from doing that. Then what you need is what they call an execution only broker. And they are people like AJ Bell, Hargreaves Lansdown, loads of others that you'll be able to find. And all that happens there is you'll open an account, whether that's an ISA or whether that's just a standard dealing account. Effectively, what you just then do is you just search on their platform, you hit buy, you put the amount that you want to buy, and it's yours. And it really is as simple as that. Of course, the methodology behind that choice that you make is something entirely different, because there's two big things for a Muslim. One is you need to decide what stocks you're going to invest in. Is it going to be some fly-by-night company on the AIM index, or is it going to be somebody like a BT? Or maybe that's not such a great choice anyway. So that's the first thing, what company you're actually going to invest in. Secondly, is it Sharia compliant to invest in that company? And again, that's a whole different kind of matrix that you need to understand. So, these brokers, they are completely mainstream. The likes of AJ Bell, they'll give you access to whoever you want to invest in, and it's up to you to kind of make that filter before you go on.
Excellent. So that's kind of the mainstream brokers. Go on there. You can pick individual stocks. You can put them into tax-saving wrappers. So ISAs, for anyone who doesn't know, you can put 20K into there, and it's all tax-free from capital gains tax. So happy days. We love that. In terms of the other stuff that you can go for, so there's advisors out there now. Robo advisors are essentially they do the advice for you, but in a kind of preset model. So think of it like investing, but at Your Sushi or Itsu or something, where you go in and you get like your preset, this is my katsu, whatever it is. I don't even know the names of these things, but the one with all the vegetables, the one with all the salmon. And with Wahid Invest, you go in, you're not going into I don't know, Pizza Express or something, where you're going to get like a bespoke pizza made for you. Actually, Pizza Express is a bad idea. I don't know what the analogy for the other side would be, but anyway, let's stick
DIY
with
stocks is like cooking your own curry, isn't it?
Exactly, that's it. So instead of cooking your own curry, you're going into Itsu, and you're getting their 4 options of their sushi. You can either go for ultra conservative, or you can go for ultra aggressive, high on the wasabi and all that sort of thing, and you go for that. And you can go for Wahid Invest, which is a very prominent one globally, and also Simply Ethical is another one in the UK as well. So you can check those both out. We've put the links below, and you can check them out. And the benefit that you get there is that you don't have to think about it. And I know lots of people don't like thinking, full stop, but also lots of people don't like thinking in particular about investing. So if you count yourself amongst any of those two categories, then going for a robo-advisor probably makes a lot of sense, because you literally don't need to think about it. You need to go onto their website and then type in your email address and literally just follow, the kind of standard guide. It's like, signing up for Amazon or something. And at the end of it, you end up with a portfolio. I guess the other thing to mention here is that these guys, they will charge you a little bit of money on top of the investment money that, for example, if you went direct to a fund via AJ Bell, which is a stockbroker, then you wouldn't be charged any advisory fees, whereas someone like Wahid or Simply Ethical would charge a small advisory fee. And then I guess, Mohsin, should we talk a little bit about pension options as well?
Yeah, sure. So when it comes to pension options, I guess the first thing to say is that, we've been preaching about this for a long time, but I'll say it again. As Muslims, you need to. It's a good idea to opt into your pension if you've opted out because you're a bit unsure. And the reason it's good to be part of your pension is because in the UK, certainly, the employer matches your contribution, and in many cases, they'll do much more than just match it. So effectively, you're getting free money, and if you're turning your hand at free money, then that's not a good investment strategy in any event. So that's the first thing. Now, just to address the Sharia compliance issue, with your workplace pension provider, you should just investigate with your workplace and with the pension provider what Sharia compliant option they've got and just transfer into that. I was with Scottish Widows when I was working. Ibrahim, I think you were with Aviva, was it, for your pension provider?
Aviva, yeah.
And they both had Sharia compliant options. Like, I think we both had to do a bit of pushing, but it is there, so definitely do that. Then, so that's the first kind of blanket thing to say. Now, there are on the market companies which are appearing now, which make things, I guess, a lot easier. So, for example, on our comparison page, we've got people like Pension Bee. What Pension Bee are really good at is they will, if you've been to like various different workplaces, you maybe you've even like retired or you're not working anymore or whatever it is, and you've got maybe 3, 4, 5, 6 different pensions. If you sign up to Pension Bee, they'll be able to amalgamate all of them, and you can sign up to their Sharia plan. And they've got that completely off the shelf, really easy, and you can do that. So that's a really good option. You've also got Wahid, who are now offering a workplace pension. So one option there is you could perhaps persuade your employer to look into those guys and using Wahid as the actual workplace pension provider, because obviously their options will be Sharia compliant. And I guess the other option in a similar mold would be something like Simply Ethical, where although they don't have the workplace pension stuff, there is something known as a SIP. And a SIP is what they call a self-invested personal pension or pension plan or something like that. And it's
Mohsin,
effectively...
Sorry, Mohsin, can you see this, by the way?
I can see it, yeah. It's the
All right.
Wahid models, right? Do you want to go through that?
Yeah, sure. So like the benefit here, and look, guys, don't get scared. I know it's got numbers on the screen and there's like a graph, but it's all right. We're going to get through this together. The Wahid, portfolios, the interesting stuff they've done on the pension side of things that they've launched is, for the first time, as you get older, you can actually change your allocations. So you can become less and less risky as you get older, so that when you get to that time that you're ready for your pension, you're actually in a pension pot that makes sense for you, which is not really possible right now because my entire pension is in HSBC Amana's equity fund, which is relatively speaking fairly high risk. So here you've got this kind of option where you can kind of change and you can go down through the different stages as you get older and older, and it suits to your lifestyle. So that's kind of, I guess, the benefit of this. The way to get hold of this stuff is either via a SIP, or you can harangue your HR officers and say to them, look, we want Wahid or we want option pensions because they've got a halal investment option, and that's the way to get it.
Yeah, absolutely. And just to extend on that SIP point, so SIP is like, you could call it like a DIY pension. You open an account with, could be a Wahid, it could be AJ Bell, could be Hargreaves Lansdown. Loads of brokers offer SIPs, and it's just like having any other share account, except that it comes with the rules of, a pension. So you can't withdraw it until you're, I don't know what it is these days, 65 or whatever, and it comes with those usual limitations, but you've got full control over it. So it's actually something. I mean, I've actually not got around to doing it yet, but I definitely do want to transfer my old workplace pension, which is not being contributed to right now, and put it in some risky AIM stocks, I think.
That's a good shout, that actually. Should we do that? Let's, I think, you know what? My pension, I was surprised. It came a few days ago, and there is actually a good point here, guys. It came a few days ago, and it's worth like 7.5 grand. And that's just the Ashurst pension. So that's like 2 years where I think I put in a total of maybe 4 grand in total over that 2 year period. And it's mounted up within, three or so years to about 7.5 grand. And the point, guys, that's of use is the benefit of compounding and starting early. Like, it's so important. Any investing that you do, start it early, and then just stick at it and leave it in for ages and ages and ages. Because the benefits that you get of long-term investing, as long as you picked some fairly good portfolios that are diversified, is that you will get the benefits of compounding, where the returns you're making every year are reinvested, and then that grows the snowball, and then that keeps on rolling, and it picks up more and more and more, so that by the end of your lifetime, it's this massive snowball, and you're off to a happy retirement. So that's the benefit.
By the way, just one point to add to this whole pension discussion. If you're sat there and you're thinking, oh, I've not got a pension, I've not even started, or there's no point in doing it now, it's too late. A, I don't think that's right. And B, there's a rule of thumb which might help everyone. So this rule of thumb, it's not like, cast iron, nailed on brilliant advice. It's just a rule of thumb. But they say that if you haven't started and you want to think about how much you should be putting into your pension, you should halve your age and put that amount as a percentage. So if you're 30, you should be putting 15% of your gross salary into your pension as that, if you follow that rule of thumb.
Great. And then I guess the final things to talk about in terms of where you can actually invest are the overseas options as well, for people who are tuning in from the USA or overseas. So you've got people like M1 Finance in the USA, through which you can access lots of halal investing funds, like the Iman fund in the USA, and the Iman kind of series. There's a whole bunch of those guys out there. You've got the Sharia portfolio guys out there as well, and you've got a range of other ones as well. If you go on our halal investment page on our website, you'll see a list of them, and you can actually filter for US options only. And by the way, guys, you should watch out for a big update on the halal investment portfolio comparison platform that we have. That's going to go through a radical overhaul, and it's going to be really mega useful, inshallah. So make dua for us to do that. Because that will be helpful for everyone. In terms of the other options, you've got a really interesting robo advisor coming online called Agaz, which we're looking out for. Then you've got some other robo advisors and kind of semi advisors in the Middle East. So Coco Invest is one that's kind of emerging slowly. You've got Sarwa, which does mainstream but also Islamic investing portfolios that you can access in the MENA region in the Middle East. And then you've got, pretty much everywhere you'll have access to brokers. If you've got a large amount of money, you can go for specialist funds like people like Arabesque and others as well that are coming onto the market. And we were having I was having a very interesting chat, Mohsin. I can't reveal the name of this broker, of this fund manager, but they're a very large fund manager, like, in the category of BlackRock. And they have 350 billion odd pounds in AUM, and they're actually launching an Islamic fund very soon. So that's going to be fascinating to see. And the guy behind it is a Muslim guy who, it's not from the Muslim market in the UK is not massive, and it's not going to make a dent from them financially, but he's driving it because he thinks that it's a kind of a service to the community. So I'm quite excited to see how that develops as well. There's plenty of interesting options on the horizon. But high level, kind of wrapping this all up, where can you actually invest? Think of it as 3 different flavors. Number 1, I don't really like investing. I don't really know what I'm doing. I don't particularly care. I just don't want my money to be at inflation risk. In that case, you should probably just go for a robo-advisor, someone like Wahid or Simply Ethical, because they're probably the simplest to do. The second option is I do kind of care. I don't really care about investing too much, but I'll put in a little bit of effort up front to save myself a bit of cost and maybe learn a little bit about things. For you, go for a broker and set up an account and buy a few funds, and maybe even dabble with a few stocks if you're particularly that way inclined, but mainly go for the funds. And then finally, I am the gift on stock investing, and I am going to compete with Warren Buffett. I'm going to read all the books, and only do this, by the way, if you actually back up the big talk with some reading. And by the way, Mohsin, we mustn't forget that we've got to announce our book prize winner. We're
Exciting.
Yeah, we'll do that. But the final kind of category is, I really care about stocks. I'm really willing to invest the time. For you, go ahead, set up a broker account and invest in individual stocks and really learn how to do it. But really only do that if you are quite risk friendly and also willing to put the time in to actually learn how to do this properly, because it's not straightforward. Like, you might think, oh, I've historically invested in 2 or 3 stocks. Some of them went up, some of them went down. I did quite well overall out of it. That's not that's not a successful investment strategy. That's basically, pretty much gambling in my view. Not from a fiqh perspective, but from a commercial perspective, that's very risky behavior, because the decision making that you're taking there is not good decision making from an investment perspective. Someone, your nan, right? She could go on to AJ Bell and she could ring them up and be like, oh, can I please invest in X stock that someone's told her to invest, and then she does, and it goes up 5 times, and then she makes a killing. Would you say that she is a sophisticated investor compared to someone who makes a loss, right, on his stock, but he's actually researched it properly? Of course not, right? And long term, your nan is not going to win out. And long term, this guy is probably going to win out. Now, of course, your nan could be, she could have made lots of dua and she could have barakah and all that sort of thing. And maybe because of that, she wins out. But, that's not the stuff that we necessarily count for in our investment journeys. Mohsin, do you think we should do the Sharia compliance stuff first? Or do you think let's do the Sharia compliance issues first, and then let's announce the winner?
Let's do it. So let's talk about Sharia compliance very quickly, because I know people are going to want the winner announced as soon as possible. So what are the Sharia compliance issues when investing in stocks? So broadly speaking, there are things to look out for when you're investing in stocks. Most people think that it's just, I just need to look at what the business is doing. And that is one part of it. But there are also certain financial ratios that you need to look at. And that will involve, looking through the accounts, making a few calculations. God forbid, it'll probably involve opening up the calculator app on your phone and getting that percentage. But it's well worth doing. Again, we've actually bundled a whole course for free, our Sharia screening course, with this course that we're launching today. So the question that comes out of that might be, well, there are lots of stock screeners online and stuff like that. Yes, there are. I do like them, but I personally I don't rely on them whatsoever. I always rely on a manual check. And my view is that, given that it's so easy to check this stuff manually, and actually it requires skills that you should have anyway if you're investing in stocks individually, my view is that everyone should be manually checking Sharia compliance of stocks. I don't know what you think, Ibrahim.
So my view is that, look, you've got Finispeer, Islamically, Zoya, and I think they're all heading in a good direction. And maybe in a few years' time, they'll be very, very good. And there is, there's a difference of opinion sometimes between them as well, which is not necessarily helpful for the layman. My view is that you could use some of these stocks for just kind of like an initial sense check, but I don't think you can. I would not rely on them from an Islamic perspective, because I think they're a bit, they're not there yet. They're not fully there yet, and it's always hard because there's a qualitative side and there's a quantitative side, and the only way that you can make these kind of instant apps work is by necessarily crunching numbers of tens of thousands of stocks and providing this universe. And we've done this as well, right? We've pulled Excel spreadsheets on our website of debt-free halal stocks, and already screened halal stocks with a 33% debt to asset ratio, etc. And there's always some kind of pork company that creeps in, and then people get in touch with us and they're like, oh, well, why are you telling us to invest in a pork company? And we say, well, look, read what we said at the start, which is like, this may do your own research, double check everything, because this is just a screener. So my kind of honest take is, I think these guys should be supported. I think you should download them, use them for initial sense checks, and see how they develop. But my personal view is that where you're going to invest in individual stocks, commercially, you need to be going into the accounts anyway, right? If you're not going to go into the accounts of a stock that you're investing your money into, that means you're not at that level of sophistication that you should be investing in individual stocks anyway, right? Because if that's not you, then just stick to a fund or stick to like a robo advisor. But if you are willing to go into a stock's individual accounts, then doing a Sharia compliance screen is a matter of about 5 minutes max, and it's an important part of doing the due diligence anyway, because you're looking at the debt ratios of a company and you're looking at understanding what the company properly does. So the very act of doing the Sharia compliance is actually really beneficial from understanding that company as well. And really high level, there's the qualitative screen, which means, is the company halal or not? And everyone can do that usually. And then there's a quantitative screen. And, as Mohsin said, we've got the course bundled in with the main course. And also we've got, free resources online that you can find as well that show you how to do it. The other, this might seem like a really simple point, but it's important to make. Most people, I would actually vouch for most people on this call will have pensions that potentially are not in halal investments. So you care about investing, you're here now, but your pension is invested in like a BlackRock fund that is not an Islamic fund. So your main kind of pool of cash that you have, most people's is pensions, is not in a halal pension. So the first thing that you need to do tonight or whenever is log on to your pension provider, or talk to your HR and find out how to get in touch with your pension provider, and find out how you can switch to the Islamic option within your pension provider. If they don't have an Islamic option, drop me or Mohsin an email and we will go to war for you, because this is a bugbear of ours, that we think that every single mainstream pension provider should have at least 1 or 2 Islamic funds on there, so that Muslims have an option. And if your HR or whoever is saying, oh no, we don't have Islamic options, get in touch with us. We have former lawyers. We might as well use it at some point, and we'll write some aggressive emails to the relevant people. And every single time we've done this, it's worked, which is quite sad, because I actually want to go to court on this point. So we'll see where we get to on that. But if you have any problems, tell us and we can help. And then the other thing you can do is point them in the direction of options pensions, Wahid Invest pensions, because they now offer halal pensions. So they could be an alternative or a bolt-on that your employer could think about. And then finally, people often ask, oh, is nutmeg halal, or is some other kind of mainstream robo advisor halal, or like an ethical investing platform, is that halal, or an ethical fund, is that halal? High level, the answer is no, because it doesn't. Even if something is ethical, it doesn't mean it's halal, because it could have too much debt, or something that is an alcohol company could well be ethical for your average Brit, but it may not necessarily be halal. In fact, it won't be halal. So that's kind of an example of where you'd have a difference of opinion amongst the scholars, between well, not the scholars, I guess, between the mainstream and the Islamic side of things. Mohsin, should I let you do the honors? Actually, should I do the honors, or do you want to do the honors?
Yeah, you go for it. You go for it.
Mohsin is incredibly concerned about the veracity of the polling that we're doing here and how random this decision is going to be.
It's because I've entered and I want to make sure that you know, I've got every fair chance of winning.
I know you were saying that, you make sure that you don't, you have to properly randomize all of this stuff. So, okay, so where should I go? Let me go on LinkedIn. That's automatically ruled out the Facebook people, I guess, for this one.
Oh, no.
But don't worry, guys, there's a Wednesday and Thursday one. Top tip, probably on tomorrow's one, I'll probably go to Facebook. But you already know that you listen to today's one. Okay, let's see. So here we have, heaven almighty, we've got like 150 comments. Okay, so let me have a look at these comments. We should have like suspenseful halal music in the background. All right, I'm just gonna, this is how legit this is. Look, guys, I'm just gonna scroll randomly, and then this is the person. Oh crap! Yeah, here we are. Yusuf Brother. Yusuf Brother. There we are. So
congratulations.
Yusuf, you are a summer vacation scheme person at Freshfields. So that, inshallah, that'll be useful for you. And you should reach out to us. If you don't, then I will reach out to you. Let me make a note before I forget and I just accidentally give it to my brother or something. Okay, so that's that done. And then, guys, the next thing on the agenda is the very, very exciting Halal Investing for Busy Professional course that we're launching. And the one-line summary is that you can, we did this when we've been running this course for the last year, but we've like given it a massive overhaul. We've basically redone the whole thing. And credit to Mohsin for getting all of this sorted. The Halal Investing course, the idea is that you, in one afternoon, sit down. We've got a bunch of resources, sheets, spreadsheets, all the different guides that you need, and you can get your investing sorted within that afternoon. So this is Halal Investing for Busy Professionals. Get it all sorted, and then forget about it for at least 6 months to a year. Obviously, keep checking. Like, you don't want to completely leave your account to do everything itself. But the idea is you will cut through all of that noise. It's really, really like simple step-by-step stuff. Hopefully you've got the sense from me and Mohsin on this webinar that we are unafraid to say like really simple, stupid things, because we know that that is actually what is relevant. And also because we often are quite simple and stupid in many ways as well. So inshallah, I think that the course will be useful. And importantly, guys, anyone who is signing up for the course for the next, I think it's for the next couple of weeks, the first 100 people who sign up to that course, they get a 10% discount, and you have to use the Halal InvestFest, what's it called, coupon, and it's all the details are in the instruction, in the description below, so you won't lose them, and you get a 10% discount on the first 100 people that sign up, and of course you get 65 quid benefit of the stock screening course as well. Before we turn to the Q&A, Mohsin, do you have anything to
add? No, nothing to add. I think we've covered everything and more.
Fantastic. Let me just show this. And by the way, I have been keeping an eye on the comments. I know we've had some very, very truculent individuals, most of whom seem to be from my friend circle, who've been commenting away. You will be held to account after this webinar, inshallah. And but for everyone else,
and on the day of judgment.
And on the day of judgment as well. But for everyone else, we will inshallah now be turning to the Q&A session. So please do fire away with any Q&As, and let's just dig in to some of the Q&As that we've already had. Hans McDonald asks, "You getting me rich, Mohsin Patel?"
Always for you, Hamdallah.
Ahmad Majid, who won the giveaway, Mr. Khan? It was Mustafa Khan, my brother. No, Yusuf Baradar, sorry. Islam Brothers, are you hiring? Yes, we are actually. If you guys know anyone who is a good journalist, we would love to hear from them. And if you know anyone who is a graduate, a good graduate, then we would love to hear from them as well. And I've just posted the job link below, so you should hopefully have that. Let's have a look. Salam, is this an existing is this an update to the existing course or a new course? So it is. It's essentially a new course because we've just redone the entire thing and started from scratch and added in a bunch more things as well. And the benefit you get with this course, and by the way, all the people who bought the course initially last year, they just get this for free. So the benefit that you guys get from this course is you can check in next year when there's some kind of new cryptocurrency Islamic fund that has launched and everyone is asking, oh, is that halal? You can just log into our course and there'll be a new section on there and you can just read up about it. Okay, let's see, what else do we have? Will this be recorded? Yeah, it will be recorded. Hans McDonald pops up again. Do we get IFG course half price if one of you is off praying? The answer is no, Hans. You don't. This is the answer actually that I gave. I'm not really sure why, but anyway, we do that. Do you guys think there will be a further dip in the market? Posing this question for when you do Q&A in case I log off early. Yeah, what do you think, Mohsin?
This is another thing about the market. One thing you have to remember is nobody actually knows. So this is all just predictions, if nothing else. Do I think there'll be another dip in the market? I think it'll at least stand. It'll go sideways for quite a long time. I think, if not go down in a probably a big way if we hit like severe recession. I think that the impact of COVID-19 has been underestimated personally, especially in the US. That would be my thoughts. I don't know what you think, Ibrahim.
Firstly, to caveat, guys, we are not financial advisors. This is not financial advice. I don't want to see 140 people now go ahead and act on Mohsin's. Actually, Mohsin's not really said anything. He just said it's going to kind of stay the same. So, Mohsin, not the most aggressive of feedback anyway. But my thinking is that I agree. I don't think the markets have reflected how bad COVID is. And I think that's going to probably happen early next year when people's resources and reserves start running out, and companies' reserves will start running out as well. So not ideal, but it is what it is.
Also, not least, we've got the US election coming up, so let's kind of see what happens there.
Yeah, that's true. That's true. When calculating if a stock is Sharia compliant, figures such as total assets are different on stockbroker sites such as AJ Bell, Hargreaves Lansdown versus what's in annual accounts. Always go with annual accounts. That's the source of truth for stocks and shares. You should always look to that. FT is pretty good. All these guys are pretty good, but the best place to always go is the annual accounts.
Yeah, you shouldn't be afraid of going to the annual accounts.
Someone has commented, I think when Mohsin was talking, Gujaratis are very shrewd businessmen. Tell me about it. Do you think trading stocks can be somewhat automated? Can we calculate the final outcome based on previous data trends?
So my thoughts on that before you jump in, Ibrahim. There is a whole area of algorithmic trading. So if you're a computer scientist, if you're into coding and all that kind of thing, there is a whole area to explore on algorithmic trading. I think that well, when you go into that area, you'll see what I'm saying. But the big thing there is that you need to find basically your edge. The thing you have to understand is that all the big investment banks are using algorithmic trading, but you can make money if you find a particular edge, and it doesn't need to be a very big edge either, because if you can make small gains in a consistent way, in an automated way, then that can be quite big potentially. So I'm not sure if that's exactly the question you were asking, but if you are, then do some reading on algorithmic trading, basically.
Mohsin's just answered a question that wasn't asked, but that's fine. I actually don't know. I was just assuming. A lot of people are giving me grief about these lights, and I don't know if there's there's a simple fix to this at this point, because it would involve, like, our offices. By the way, guys, our offices are in Islam Channel. So look, if you look over there, Islam Channel is live over there. So I'm kind of hiding in here, and if I go outside, you probably won't be able to hear me. So I think it's better to have this kind of lighting and be able to hear me, as opposed to the sight aspect. I've never been that good looking anyway, so it's fine. Bell Boys, this is a very good comment. We take this with a lot of pride, actually. So jazakallah for that. If you'd said that, if I'd seen that earlier, I'd have definitely swayed the 10 books in your direction. WYMKRT. Ilham, is it safe to enter the stock market at this time when the stock markets are still high despite the corona pandemic? Aren't the stocks not overvalued at this moment? Really good question. And I know, Mohsin, you will have a lot of thoughts on this. High level, the thinking is, ultimately, it's very, very hard to time your entry into any stock market, because you just don't have the data and you just don't know what's going to happen to the world. So it really is, I think, a fool's errand to try and time your entry into stocks and shares, unless you're a day trader, unless you spent months and months and months every day staring at a screen and understanding like those particular 10-20 stocks that you look at every day, and you get them in terms of like their daily cycles, then trying to enter the stock at a point when you're comfortable that you think this is undervalued. I'm assuming, Ilham, that's not you. It's certainly not me. And we all have our day jobs, so we can't do that. So then in that case, you need to go at value. That's what you're looking for. Fundamental value, long-term, 5-10 years. This is where I think this stock is going to go, and I think this is a good market to be in. Like something like, I don't know, Zoom. If you're bullish on where this ecosystem is going, you might invest in Zoom still. And you might say, oh, well, Zoom's really high right now. But the question is, will it get higher in 10 years' time? And that's kind of what you need to be thinking about. And the other thing to mention here is averaging out the entry point. So if you consistently invest a small amount of money over 10 years, or in Zoom stock, for example, Zoom will go up and down, right? Like every stock, Zoom will go up and down. But if you're confident that Zoom is the right stock, and you invest, I don't know, £1,000 every year in Zoom, you will get a nice average of the price over that 10-year period. So some years you might be buying into a dip, some years you might be buying into a peak, but overall you'll get a nice average. So that's a good way of timing your entry into stock markets. Mohsin, anything?
Yeah, just one like line really that I kind of hold on to, and it's a lesson that I learned. Good stocks always end up. Good stocks always look expensive but end up cheap. So a lot of people get really hung up about, oh my god, I could have bought this for like this price last year, but it's gone up to oh no, I'm not going to invest. But then next year it's gone up again, and that's what happens to good stocks and good companies. Like good companies just keep on growing and they keep on building, and bad stocks, they go the other way.
Agreed. Honestly, there have been some absolute stinkers that we've entered into in our time as well. Oh, by the way, another top tip, guys, let your winners run and just cut your losers really hard early doors. And if you just do that, independent of whether or not you're a good stock picker, you'll probably come out really well, because 90% of the time, again, this is not a scientific figure, but 90% of the time, the winners that you have are generally good stocks and they'll continue rising over the next few years. And 90% of the time, the stinkers, they're going to continue stinking your portfolio out. So don't go there.
A good book on this whole thing, the psychology of investing. We should put this in the bundle, actually. It's called The Art of Execution. I thoroughly recommend reading that.
All right, that's a great shout. And you might be asking, oh, hang on, what do you mean, like cut your losers? I think a good number to have in mind is probably like 10, maybe 20%. It depends on your sensitivity and the amounts that you're investing, but 10, 20. I would probably say, let your winners run and start cutting things whenever they drop below maybe 15%. That's where I'd be, just set yourself a number internally and just stick to it like glue. As soon as something goes below 15%, just cut it. Just, don't like hang around and think, oh, maybe it might bounce back up. You as an investor mentally, you're not interested in that stuff. And most investors, what they will actually end up doing is the exact opposite of what they should do, which is they will just sit on their losses and they will get very excited about a 20% rise in their stock and they'll cash in really quickly. That's not what to do. All you've done there is you've locked your money up into this losing stock, which you could have taken out and put into something better and actually made more money out of. And on the winning stock, you've exited early, and now it's shot up to 100% of the point you entered. So just be very, very cognizant of that. 10 minutes pre-book call, and did mention this about, but here we are today, mashallah. Excellent. Someone is listening out there, alhamdulillah. I like this YMKRT guy. He's got some good banter. Thoughts on passive investing for long term, e.g., monthly contributions to Wahid Invest and hold that for 30 or so years before cashing out. Yeah,
that's the language. That's the language we're talking.
Just honestly, like the best investments are really, really boring, right? So just if you're getting bored by an investing page, then probably invest in it.
Solid. But yeah, Muhammad, I think that is a very, very, very sensible strategy. Just take the emotion out of it, make it completely automated, lock it in, and inshallah should be fine.
Yeah, and to be clear, that was a joke. Like, if you are getting bored, then still do some reading on it. Is the mother-in-law happy with selling the Mrs. Gold? I think so. Yeah, I think so. She's, at least I've not told her yet, so we'll find out.
Brian's probably taken her gold as well. So
YMKRT. Honestly, I'm loving this YMKRT guy. He's not said anything negative yet, unlike other people, which we'll get to. What about apps like Free Trade? Do you use apps like that to invest your money?
Free Trade is not something I've used. I'm aware of them. They're absolutely fine. From memory, they collect all their trades at the end of a day and do them in bulk. I think that saves them a bit of money. Yeah, I'm pretty ambivalent about them. As long as you know that what you're investing in is halal, then it's fine. I think their choice is a lot more limited, but if you're happy with it, then yeah, absolutely fine.
This is Mohsin. Any thoughts on this one? A little details on the HSBC fund. It has FX exposure. Most stocks are US based. So it comes in different flavors, this HSBC fund. There's a US version, there's a GBP version. So just choose the right one. I actually ended up winning by going for the US version, and the British pounds tanked. And as a result of that, I did quite well. But
unless what he's talking about is fundamentally there's FX exposure because it's all US entities, which I'm quite comfortable with. If a company is reporting in dollars, the USD generally is a pretty decent currency, and as long as the general economy is doing okay, then you should be fine with having that USD exposure.
Yeah. Let's see. Thoughts on passive investing. Okay, we've answered that one. I want to invest in FTSE 100 companies. Which trading platform should I use?
Pretty much any. We've used AJBL, Hargreaves Lansdown. We like them. The key thing, if you're going, like I said before, if you're going to do individual stock investing, just be comfortable that A, what you're investing in, and B, that it's Sharia compliant.
Somebody said curry. I'm getting hungry, says Khurram Iqbal. This is my favorite comment. And maybe we should try like giving away 100 quid worth of curry in our next Halal InvestFest and see what happens.
100 quid of Uber Eats might be an option.
Yeah, there we are. There is a talk of there being a stock market crash because it's inflated due to QE currently. What are your thoughts?
I mean, we don't know.
We've called it, haven't we? We've said it's probably going to happen at some point.
Yeah, I mean, I kind of agree with it, but fundamentally nobody knows.
Yeah. Allahu a'lam. Allahu al-Musta'id. As Prophet ﷺ said, I don't set prices, Allah sets prices.
There we go.
Do you offer any intern roles at your company? We do. We're going to be offering some intern roles via the Kickstarter scheme that the government's offered. So do check that out. Last time I checked your website, the investment opportunities were only available for large investments only. Has that changed now? Yes, Ahsan, we've always had a range of options for different people. So you can invest in, like if you go on the halal investment page, then you can choose the minimum investment and you can go in as little as £100 and invest in people like Wahid, Yildiz, even any fund really on the stock market. You have higher investment options, higher entry point investment options, and we'll talk about those actually tomorrow. So tomorrow is going to be really interesting, and the day after, property, and there's all sorts of different things going on in property and how you can get exposure there. So we'll talk about that, and there are a bunch of options there which need a much higher entry point, and we can talk about that. And then on the third day of Christmas, my true love, no, on the third day of the Halal Invest Fest, we're going to talk about the alternative asset market as well, and this is the the kind of wild west of investing, or the kind of cool stuff that me and Mohsin in particular get very excited about. So yeah, look out for that on day 3. Okay, Dilur, do you want to take this one, Mohsin? I think the answer is
Go
no.
Ahead shares. What do you think about Go Ahead shares? I think it's very cheap because I've had it for 13 years. In 2008, the price was £12. In Jan 2020, it was £22. Now it's £6. Very cheap. I've no idea. I've not looked into Go Ahead shares. What I would say is that without wishing to knock you down, Dilur, because I'm sure you're coming from the right place, I honestly don't, as much as I am a Gujarati and I look at price, I've always said to Ibrahim, even in the Tesco bargain bin aisle, I've always said it's not about price, it's about value. So if you can get good value, like I said, I invested in Microsoft recently, which was at like $160 or whatever it was. It's not about the share price, it's about where is this company going, and if it's going somewhere, then you want to be in that.
That's it. Because cheap is always relative, isn't it? Because you're thinking it's cheap relative to where it was, but you need to think about, is it cheap relative to its fundamental value? Like, is it worth the market cap that it is at right now? And if you think it's not worth it, like it's cheaper than it should be, then that means that it's a comparison that you're making. That's a key thing. Don't compare it to previous prices necessarily. That can be a part of your analysis, but compare it to what you think it should be worth. And that's a difficult one to really work out. And there's a really good book by not Warren Buffett, Benjamin Graham, who actually I think taught Warren Buffett, and it's a very thick book on investing, The Intelligent Investor. And it's that book is very boring. Honestly, it's very, very boring, but it's the kind of book that you need to read in order to be able to invest properly. And you need to kind of be in that kind of ballpark if you're going to be investing in individual stocks.
Hansla's on fire. He said, have you heard of Money Saving Expert? You remind me of a Muslim mind. All I can say, Hans, is that's one of the bigger compliments that we've ever received.
Could you please comment on the permissibility of day trading and scalping stocks as opposed to swing and position trading that you've mentioned? So on that, there is a difference of opinion. We have a forum.islamicfinanceguru.com. Let me share the link. And on there, we have two muftis, Mufti Bilal Umarji and Mufti Faraz Adam. And you can ask any questions on there related to fatwa, but also you can just share your thoughts on investing, and we can continue the discussion on there. And there's a evolution in thinking going on right now amongst the muftis on this, and the current view is that it's possibly not permissible to day trade, whereas historically they've considered it fine because you're just buying and selling stocks. And the issue there is that stocks typically they close out the actual transaction, and they actually swap hands in the back end in 3 days. I think it's T+2, isn't it? So 3 days. And because of that, it's not necessarily, when you're buying a stock, you don't necessarily own it. So the issue is that if you buy a stock and then sell it within a day, you are selling something that you don't technically own. So that's the kind of concern. My gut instinct on this is that, I mean, it's, obviously take this with a pinch of salt. I'm not giving a fatwa, but my view is it's probably fine, because this is just market custom. And if one goes down this route of saying it's impermissible day trading, then you're essentially ruling Muslims out of day trading. And I'm not sure that is necessarily, something that, Islam prohibits things typically because it's unjust, or it's going to result in disputes. And my view is that, particularly on larger stock exchanges where everything is handled through central brokers and there's a lot of insurance in place, the potential for dispute in these kind of scenarios is very, very remote. The potential for dispute only really kicks in if, at the point that you've sold that stock and it's not really clear who owns it, the brokers that were holding the legal title to that share then go into liquidation. And these companies we're talking about are worth billions and billions of pounds. They go into liquidation, and then it's unclear who owns your stock and where that lies. That's the kind of scenario we're talking about. And even in that scenario, these guys are all holding your client assets in a different account anyway. So without getting really technical, my view is that it's probably fine, but this is something that the muftis are thinking about right now, and their current thinking is it's probably not fine. So get stuck in on the forum and have your voice heard. Is there an opportunity for Vanguard to launch a Sharia compliant fund?
Good question. One day I'm going to do something about this. I got in touch with them a few years ago. They basically said no, but if there's demand for this sort of thing, then why not? And now, alhamdulillah, that we've grown, I could foresee us doing some sort of campaign, and we present that to Vanguard and see what they say at that point.
Excellent. Is the civil service pension scheme halal? Really good question. So there are two kinds of schemes, broadly speaking, that exist in the UK. One is the direct contribution scheme. So this is where you're investing money into a private pension that is provided via your employer, but your money is actually going to determine what you get out at the end of it. And the returns that are made on the stock market. Whereas a civil service pension scheme is a direct benefit pension scheme, or a final salary pension scheme, it's also sometimes called. And these pension schemes will pay you a set percentage based on your final salary. And typically what they do is they take your final salary, divide by 60, and then times it by the number of years that you have in service, or something along those lines. And then there's like another multiple on there. And these final salary scheme pensions are perfectly permissible. And the reason why is because they are seen as part of your employment contract. You're not necessarily bothered how the civil service gets hold of that money. All you care about is that you get that set money, which is seen as like a deferred part of your your earnings, as opposed to any link with the investing. So yeah, generally speaking, these kind of schemes are perfectly permissible. Do you want to take this one, Mohsin?
Yeah. So Medimaps is asking that the possible complexity of how to calculate zakat on shares puts me right off going into shares. Example, you have to give zakat on only certain assets in the company you have shares in. Question mark, question mark, question mark. It's a very, very, very valid point, because I'm sure we're all in the same boat where we get to zakat time, and I don't know about you guys, but I'm sat there with like spreadsheets and this and that, and I'm trying to rack my brains about what I've got where and all this kind of stuff. And shares is just one more complexity. But honestly, I actually don't think it's that complicated when you really like put your head to it. You could just take a really conservative view and just pay zakat on the market value of your shares. Like if you want to get rid of any headache, you can overpay on zakat, and you can just say, I've got £5,000 worth of shares. I'm going to pay 2.5% of £5,000. Where it gets a bit more technical is where the reason we're talking about this is because with shares, companies have assets in them, and some of them are zakatable and some of them are not zakatable. So a general rule of thumb when it comes to shares, ideally you should do the individual calculations, and we've got an article on exactly how to do this. But a rule of thumb is to take something like 25 to I think, does Mufti Faraz say 25%, Ibrahim?
I think so, yeah.
Yeah, so for like funds, and I guess you could apply this to stocks as well, individual stocks, I mean, a rule of thumb would be about 25%. So what you would do in that example of £5,000, you would take 25% of £5,000, so a quarter of £5,000, and then that figure, you pay 2.5% on that. So it's actually not that complicated. Like you can just pay it on the full market value if you want to be conservative.
Is derivatives halal? So derivatives are typically not halal. So
they're also plural.
Very good. Mohsin, by the way, is a grammar Nazi. He will often have like a complete breakdown if we don't put the apostrophe in the right place and that sort of thing, which is,
if we don't have our grammar, what do we have?
What would you do if you're self-employed regarding pensions? Get a SIP, I think, is the key answer there, and just revisit what your situation is with state pension as well, and just make sure that that side of things is properly sorted. So you get a state pension by contributing via national insurance contributions, class 2 and class 4. So have a look at that. And I know that because I've been reading a book on this recently.
I was going to say, you're all over it with class 2 and class 4, Ibrahim.
I know.
The other thing, Muhammad, to remember is that the pension contributions that you make will benefit you because you'll be able to write that off.
There we are. Mohsin Patel is like all Gujaratis. He's very hot on this tax avoidance, tax planning.
Tax efficiency, I like to call it.
Tax efficiency. What is your view on market cap instead of total assets when screening a halal stock?
Fine. So it's better to use like an average if you're going to go the market cap route. So like a 3-year average is probably better if you want to go down that route. I tend to just look at all the calculations. So I will usually do a calculation on versus total assets versus a 1-year market cap average and versus a 3-year market cap average. Hopefully they're all coming in the right sort of figure anyway. If any one in particular is out, just kind of weigh it up and take it from there.
Really interesting question from Kareem Galal. He's asking, is it viable for a student to make minimum wage trading? What level of competency does it take in your experience? It takes a high level of competency. I think you need to have been, you're probably, and I think also you need about 100,000 to start off with. So for most students, that's not a goer. And the reason why you want 100,000 to start off with in day trading is because you will be not wanting to risk more than maximum of maybe like 1% of your overall pot in any particular transaction. So you're going to be putting in maybe like 1,000, maybe 2,000 max into every transaction. And you need to put in that much in order to make a decent return on a day trade, because £2,000, let's say you make 1% return on that, that's 20 quid. That's not going to, you're not going to 20 quid, you earn that for 2 hours working in Tesco, let's put it that way. So you need to put in a decent amount of money into your overall portfolio and make like 5 or 6 trades a day perhaps, and try and add up those those 20 quids and get it up to 200, 300, 400 quid a day. And it is possible, but you need 100k to start off with, and you need a lot of time and experience, and there will be a lot of learning that will go into this, and a lot of losing money as well. And trading is not right for everyone at all. Like, it's genuinely not right for everyone, because you need a particular kind of mindset. with regards to risk. And if you're someone who panics and you're someone who makes emotional decisions when it comes to your money, then that would indicate to me that you're probably not the right person for this. Is accounting for insurance companies halal? Does Scottish widow pension have halal options? Yep, it does. I'm an ANF student. Where do you recommend I start getting into stocks? Read some of the books that we have shared on our on the book list that we sent around, and have a look at those. We've also got an Islamic finance reading list. You can check that out as well. That's also quite good. If there's a fund from non-Muslim investment house and they have a sustainable fund, but in the basket of stocks they have around 3 financial companies, does that make the whole fund not halal to invest? The key thing is not necessarily the individual companies like that. That potentially could be an issue, but it's also about the debt levels in each of these companies. Like this non-Muslim investment house has a sustainable fund, but that doesn't mean that it's going to be a fund with 33% debt to asset ratio every time. They just don't care about that. So that's why it's very problematic to invest in any fund other than a Muslim fund. And it's very hard for you to even delve into the individual holdings of a fund, usually, because most funds will not make it public. So that's extremely problematic. You can't even get in to work out if it's halal or not. Is paying monthly for car insurance haram? If you are going to be, if there's some kind of loan involved, i.e. they're going to be charging you an interest amount, then of course I would avoid that. But otherwise, it's not problematic. Even if it costs more per month, if it's just a payment, then that's fine. What else? Nahid is a big supporter of ours, and he's a good lad. And he says, "Assalamu alaikum, Ibrahim," and "Assalamu alaikum, Mohsin." I like how he wrote it all in caps and individually to each of us.
Wa alaikum assalam.
Do your courses cover investment by other people into a fund, etc., or also about doing stock trading directly on the stock market? Mohsin, you want to take that?
Do your courses cover investment by other people?
It does both, I think, is the answer.
Yeah, so I mean, yeah, we talk about the stock market in terms of funds and in terms of stocks and lots of other investment classes too.
Yeah, and we give like specific strategies that you can use to actually invest in the stock market as well, like using individual funds and that sort of using individual stocks as well. Where can I buy access to the course you described? The link is in the description below. Please do use the Halal InvestFest tag to get yourself a 10% discount. I saw a video of a stockbroker say that if the market goes up or down, they make money either way. But does that mean the normal people like us are the ones who lose out? Not necessarily, because a stockbroker just makes money because they get paid brokerage fees if you buy or sell a stock. So they do actually make money if it goes up or down. But that doesn't mean that you particularly will end up losing. That it's just the way it is. Where can I share my investment ideas and ask for feedback on Islamic investment tools? Can I use the IFG forum? Yes, absolutely, Mara. You certainly can. Easy to fix the lights. Just clean your camera lens. That's interesting. All that's done is like move the lights the other way.
Try it again. It's done.
Blood. That's amazing. Who is this guy? Who's this guy? Altaf Ilahi.
He smashed it.
I'm actually in shock. Let's Ruqya Support, I think is his. I can't see his full name, the logo, but shout out to Ruqya Support. It sounds, this guy. Honestly, that's incredible. Altaf, well done. Jazakallah khair for that. Okay, who else do we have? Nahid Ali, a chicken burger half-time holiday in IFG Live. Life is good.
It's better than like Champions League, isn't it? Which is about to start.
Oh, that's very true, isn't it? Okay, what else do we have? When do you pay zakat on return on stocks and pensions? So I think the best way to pay zakat is just on the zakat day every year, one time, just fix it, and then just do it all at once. I'm a final year law student in the UK, hoping to secure a training contract in the Middle East where I live. IF is quite big here, and how would you suggest I start learning more from a commercial awareness point of view? Read the Financial Times, do some stock investing. That's actually a
Yeah.
great way of gaining some commercial awareness.
You know, the thing about I'm just the reason I was hesitating, I was putting myself back in the shoes of being a TC applicant, and everyone talks about commercial awareness, and everyone talks about it like it's something you can just gain overnight. The reality is, you just need to kind of, like, with hindsight now, it's just about understanding the business world and talking business lingo and understand what's going on. And like Ibrahim said, investing in the stock market is actually a really, really good way of demonstrating that. Like, trust me, everyone says things like, and you know, Ibrahim just said it right now, like read the Financial Times, read whatever. But everyone can do that. But it's the real life lived experiences that will actually stand out. Like, I remember in my interviews, the things that partners asked me about was like the little bits of business experience that I put in my applications. Like, that's what they were interested in.
Yeah, for sure, for sure. So do cool stuff. Khurram Iqbal is sticking his foot in and twisting the knife. It's a glare off your makeup. Thoughts? Which platform do you recommend? Can you invest in the S&P 500? Not if it's a tracker, because the S&P 500 is a mainstream index, and so it will have lots of haram stocks on there as well. Thoughts on trading 212 for DIY investing, as they have zero commission and fees? Obviously, assuming you screen the stocks properly before investing, no problems with it whatsoever. As long as you are investing actually in the stock itself and not a derivative or some kind of like other spread betting company or forex or something like that, no problems whatsoever. Go and knock yourself out. It's a very interesting model as well that trading 212 have used, and because of what they call the UK Robinhood. The Robinhood app in the USA revolutionized the stock brokerage arena in the USA by basically charging nothing, changing everything to free. And the way 2/3 of the money that any of these brokers make is they use your money that is sat in their account, and they lend that out on the money markets, and they make interest based on that, and they make kind of short-term returns based on that, and that actually accounts for 2/3 of their profits. So what Robinhood did was they basically said, look, we're just going to just take those profits, and we're not going to charge any commission, which is the 1/3 of the profit that brokers make. And so Trading 212 have fired the opening gun on doing the same in the UK. And I wouldn't be surprised in about 3 years' time if everyone was just charging zero brokerage fees as a result. So yeah, Trading 212 are I think doing some interesting stuff. Are there any other ways you would suggest investing in growth businesses, e.g., companies on Crowdcube? Oh, hey, you've got us started. Hey, honestly, if you asked this question earlier, we'd still be here. My simple answer to you on this is tune in on Thursday, and we'll talk about investing in private companies, either via debt or via equity, or we'll talk about Crowdcube, we'll talk about Seeders, we'll talk about everything else, and kind of give you a good sense of how you can invest in this stuff. This is that's the day of the Halal Invest Fest that I'm most looking forward to. Qari Yasir Balesaria, thoughts on Bitcoin? Is it the future?
Um,
I'm not laughing at this. I'm laughing at the next one I'm going to put up.
Probably not, but who knows? Is
I
my
think
honest answer.
I think blockchain is the future, but I don't know if Bitcoin is. Honestly, don't know. How much curry can I buy for 1 Bitcoin?
Quite a lot, I reckon.
Yeah, quite a lot. One one Bitcoin is worth in pounds at the moment. It's worth £9,238 and 25 pence. So let me just do that. 9238 divided by what's how much is a curry worth?
I don't know, about 7-8 quid.
10 quid. 923 curries is the answer.
Decent.
All right, guys, we should probably wrap up very soon because we don't want to overstay our welcome. Altaf Ilahi, I'm going to come to Altaf Ilahi again after his remarkable show earlier. Thanks, bro. I'm going to sign up to your course, bros. By the way, while I have your attention, I live the work you do. A heartfelt Jazakallah khair. Jazakallah khair to you, Altaf Ilahi. Honestly, very heartfelt. I mean, that was just, what a move. That was such a great move.
Pulled it out of the bag, didn't he?
I know, I'm going to remember that one. And everyone else that's watching, remember that if ever you're in a situation like that. Okay. The fact that this has gone on for over 90 minutes shows the appetite for this type of info. It does. Although if you emphasize more on the gone on for, shout out to Altaf. How do you think ESG will affect IF in the future? I think if Islamic finance can sell that it is actually ESG, it is actually environmentally and socially and kind of governance kind of friendly, then I think Islamic finance could attract a lot of ethical investing money, which I think is great. Oh, Maruf has asked a good question. Who is worth more?
By the way, this is Quit Genius Maruf.
Is it?
So Maruf WhatsApped me. It's completely randomly and separately saying, "Oh, like which broker should I go for?" And I was like, "Get on this YouTube, lad."
Who is worth more, Ibrahim or Mohsin? It has
Definitely
to be
Ibrahim.
What kind of funds do you recommend? Also, platforms like Wahid. How can I be certain this platform will still be around in 10, 20 years' time, for example? Very good question. So the kind of funds that I think recommend, I'd advise you to look at the Halal investing page on our website and just compare them, because we're happy with the funds that we've got on there. They're all very robust, large, regulated funds. So check them out. And on the Wahid point, I honestly don't know if they're going to be around in 10, 20 years. I suspect they will be because they're a well-funded startup. But the key thing to remember here, guys, is that if for some reason Wahid collapses, your money isn't going to collapse with it. Because if you understand how money is held in the UK, I think it will give you a lot more peace of mind. Money is held, like, Wahid don't hold your money. Your money is held by another custodian of your money who is regulated and knows how to hold that money properly. And they don't even hold it as part of their own business. They will hold it in a separate client account that is just segregated for your money. And so that money, even if Wahid collapses, will still be there. Now, if for some unforeseen reason this company also collapses, then that money is still segregated and it's still yours. But if for some unforeseen reason there's even some kind of effect on this client money, then that money is also protected by the FSDS scheme that protects up to 85,000. So there are so many layers of protection here that it's great that you asked this question, because I think people don't realize how much regulation actually protects you out there. Do you plan to discuss sukuk and how to invest in this asset class in this festival? Rami will cover that off tomorrow, inshallah. When you mentioned used AJBL before, do you mean dealing account or the ISA account? Any of them are fine. And then I think last question, guys. Muhammad Suleiman, if I invest with you guys, how likely from past trends for me to get at least the same money back? So we don't actually invest. We're not fund managers. We don't take money from you. We don't have a fund. We are literally, as Hansla was saying earlier, a kind of money saving expert. We just compare between different funds and kind of point you in their direction. So we don't. If you invest with us, then you can't, because we don't take your money. But we would say that if you look at other funds, don't just look at their past performance. Actually look a little bit at what they're up to as well, because past performance is good as an indicator, but it's not the be all and end all, because past performance does never reflect the future performance. And there's a great philosophical point here that Hume made about this, about how, anyway, we won't go into that, but there's a very interesting philosophical point here as well that you can look into as well. Oh, Muhammad Suleiman, you meant the Angel Syndicate. Tune in on Thursday for that, and we'll talk about that. Majdi Asset Managers, I'm not sure I've heard of them. I might have come across them, but I don't think I've heard of them. And Islamically, we've covered off as well. Okay, guys, let's call it a day there. To reiterate, we're back tomorrow to cover property. And fun fact for you, I qualified as an electrician in my gap year, and I actually did a few property refurbs. So there's a lot of history there. And fun fact for you on the Mohsin side of things, Mohsin is a Gujarati, and obviously his family have developed and redeveloped many properties in their time. His father-in-law actually developed a project worth around $1 million a few years ago, where he did like 10 different houses, and they look absolutely fantastic, right slap bang in the center of industrial Bolton, which is amazing. And then on day 3, we will be covering alternative assets. So you should definitely check in on that. And finally, of course, the Halal Investing course is live now. Do use the coupons. There's only 100 of them. Once they're gone, they're gone. And look forward to speaking to you all tomorrow, inshallah. And let everyone know, guys, about this. And on the LinkedIn, you should get on. You should follow me on LinkedIn and on Facebook, and share the book, the Halal Investing book pack that we've put together worth £130. Share that and like it, and follow the instructions on each of those posts, and you'll be in with a chance tomorrow, inshallah, and on Thursday for winning that 130 quid worth of books. Until next time, assalamu alaikum.
Salam, everyone.